Good morning. What's up, guys? Happy Midas Monday. We are here and ready to rock. You are looking at a 5-minute chart here on NQ. It's, of course, the futures contract for the Nasdaq, right? And again, this is a 5-minute chart. Let's trade some RAM, see what we can get done here today. What do you guys say? All right. 450 out. And institutional orders are clear, which means we can do as we please, which is always a good thing to do. Good morning, guys. Kane, Roy, Outlaw, how we doing? Lee, good morning. Pete, how we doing? All right. Well, all inside bars here so far. So first one that presents itself, let's hit it. Florian, good morning. How we doing? John Stealth, what's up, guys? All the regulars. Maury, good to see you. All right. Good work, Top. Love to see it. All right, bar 5. We're 3.5 minutes out. Do we get something intriguing? Now, again, if bar 5 closes as a nice, clean bull body, equal to the size-ish. I mean, growing a little bit, but the bars, you know, I mean, they're not tremendously large today, so even a growing body would be okay. But here on bar 5, again, if the bulls close it high, nice and clean, really not much wick, and not shrinking, at least considerably, then I've got a stop limit buy for the bulls. Let's see what they can do. Not too much so far. 3 minutes. Okay, but volatility here today, I mean, the bigger bar, we're looking at a range of like 50 points. So it seems to be maybe down a tad from late last week. Which means that sizing potentially needs to go up a tad. At least compared to the smaller size late last Friday. So let me do some quick math here. Alright, well, let's see how big the signal bar ends up being. If it's less than, like, 35, 30 points, then we're going to bring the size up a bit, but honestly, as it sits right now, I'm rocking maxed out fundeds, man, so you don't need too big per account. Brennan, good morning. AK, how we doing? Sal's, good to see you. Can you share the math that you're using to determine size? So, okay, so when I'm thinking about sizing, I don't necessarily, I mean, I kind of do, but it's not like I'm running an exact formula down to the tick. The way that I think about sizing, at least, you know, I usually approach it the same way regardless, but especially like the first, while you're still below the buffer in an account, or taking payouts above the buffer, taking it back to the buffer. I mean, you guys know, I've never thought it's a good idea to just try to build some massive buffer and go for the payout record. I think that's not a great idea, because what you could do is just take the money and then you can just trade it yourself if you choose to. Like the point of prop, I mean, unless you're like really, you know, you have, I don't know, you guys know what I mean. Like, why leave your money with a company when you could just take it? Now, the reason a lot of people do that is because they have rule breaks because they're trading way too big from day one, and on day one they make $3,000. Okay, but they need to trade 7 more days, at least at Apex, and they need to get that 30% rule in check. Okay, inside close on bar 5. Let's watch bar 6. They have to get that that 30% rule in check, right? So they end up having to continue to trade big, which, is kind of an issue. And the way that goes is you end up blowing a lot of accounts, which I guess is fine if your approach is to try to take, a $1 million payout or something. But if you have trading edge, I think what makes more sense is just get as many accounts as you possibly can, scale horizontally. And for most of you guys, I think that's probably the way to go. I mean, would you rather have an ultra low probability of being able to somehow string together a streak of, winning trades? Because if you lose 1 trade or 2 trades back to back, trading that big to try to get the payout record, it's gonna, you're just blowing. So you have to string together kind of a good luck streak, which I think is kind of silly and not, necessarily a responsible way to try to make money. For most of you guys, honestly, I think the way to go is just try to take consistent payouts. You can still make a whole bunch of money, just take them in smaller chunks. So anyway, all that to say, I've always said, I think kind of minimum, you need to be able to lose 7 or 8 trades back to back before you blow the account. Now that doesn't include any trailing drawdown pull. That just includes the loser size, so it actually ends up being a little bit less. But the way I think about it more like 10 to 12. You need to be able to lose 10 to 12 in a row before the account blows, because once you have trades that go in the money, pull back, stop you out, that might count as up to maybe almost 2, losers in a row, because it sucked the trailing drawdown up by almost a winner. So, 10 to 12, that can afford you minimum 5 to 6 stop-outs in a row, max like 10 to 12 stop-outs in a row, and you blow accounts way less frequently. And eventually you get to the point where your payouts are no longer capped, which is obviously a good thing. And it adds up, man. When you're trading 10, 15, 20 accounts, it adds up big time. But I get it. It doesn't hit the dopamine receptors quite the same way as trading 5 minis and saying, I'm going to get that payout record. Okay. The rest of us will just keep taking money. James, good morning. Hey, Trev, how we doing? Jerry, Gabriel, what's up? Steven, good to see you, big dog. All right. Minute 56 out here. Yeah, risk per account. Listen, this is literally what I was just saying. Just do the math yourself, right? I think it makes sense if you're in a 50K funded with Apex, for example. For me, what makes sense, just do whatever you want, is to risk, somewhere between like 100 and 350 per trade per account. Now, just pick one, try to keep it relatively consistent. Okay, maybe, you can think about something like exponential bet sizing, which makes a lot of sense down the road in your personal accounts. When profitable poker players have the hand of a lifetime, they bet more, right? That's called exponential bet sizing, because you have more expected value in the hand and you bet more money. I'm not a poker guy, but it's a similar game, okay? So, think about that. But with trailing drawdown, it's a little bit different. So you only have so much room to bet exponentially. So a lot of you guys are like, oh my God, I'm risking, $1,500 per trade in a 50K. It's like, well, let me tell you something. Even if you have positive expected value, that right there is why you have not taken a payout. That's the problem. Ego aside, big dog, the fuck. And let me tell you, you have to trade the 8 days anyway. So if you're if you're risking $200, $100, $200, $300 per trade per account over the 8 trading days, you should be pretty much over the buffer and then some. And it's like, that's the first day you can take a payout anyway. So is there really a reason to trade bigger? Just to increase the probability of blowing? I don't think so. We scale horizontally around here. I think it's the way to do it. And again, for those of you guys in bigger accounts, like, 150s, 250s, 350s, take that same math and apply it to the bigger drawdown. You're an adult, you can do some basic second grade math. Come on now. If you need me to tell you how much to risk, wait, what about a 250 though? What about a 250? I just told you the equation that I use personally for myself. I just told you. If you need me to tell you the answer, man, you're asking to make, $100,000, $1 million a month trading. And you need me to run a second grade equation for you. That make logical sense? You got it. Come on now. Bar 7. What do we got? Let's see. Whole bunch of inside closes. Trev, good work, brother. Keep that up. All right, minute 40 out. Still inside here on bar 7. Man, early mid last week. Even I think maybe the week before too. Bar 7 was the golden child. We had beautiful trades on bar 7, like, what, 3 days? Inside of a week? Not looking too promising here today out of bar 7, huh? All right, 60 seconds here. All right, good. Give us a nice close. Let's see what bar 8 can bring. Yes, sir. I size quite differently. So if I'm trading, depending on volatility, anywhere from like 1 to 5 micros per 50K account, for example. In a funded, depends on volatility again. More like 3 to 5 in an average market. Micros per 50K funded. Again, I'm not saying this is the way to do it, but if you have positive expected value, you have to think about it this way. Apex evals especially when you use code BIG, are too cheap to spend weeks in. Once you have positive expected value, your mental, let's say your brain power, is better spent in the fundeds. Opportunity cost is very real when the evals are as cheap as they are. So I size up in the evals, I just try to get them done. Again, best way to do it, as far as like absolute highest pass rate ever, no, of course not. If I was going for the absolute highest pass rate ever, I would trade like 1 micro and spend months in the eval. And then I could say I have the highest eval pass rate of all time, and everyone would say, who gives a shit? And my family would be like, that's awesome. What are you doing in there? Media, how we doing? Good morning. No. Absolutely not. Do not run martingale or reverse martingale. That's what like 12-year-olds do. Because they think it's some mathematical way to beat the system. It's... Come on. Theoretically, martingale would work. Theoretically. Too bad in the real world, there's a whole bunch of things that make it absolutely not work. Case closed. That's it. Martingale would work if you had unlimited money and 0 parameters. Okay, if you could bet as much as you want, with 0 like drawdown limit, and you had unlimited funds to do so. But if you had unlimited funds, why would you need more? So you wouldn't be playing anyway. Martingale is a flawed system. Don't waste your time. Trev, been trading 6 micros per trade, been in the eval for a week. Yeah, a week's not too bad. Thoughts on upping it and getting it completed and out of the way tonight, or keep what I'm doing till I'm past? Yeah, listen, all you guys know, when I say I size up for evals, I size up. Here's my logic for myself. Again, best way to do it for a high pass rate? Oh, highest pass rate ever? No. Is it the best way to do it for me to spend as little time in the evals as humanly possible? Yes, it is. You know, while still, like, I know a lot of people, they'll just like pin evals against each other coming into CPI. Yeah, that's great, but I'm not going to do that because someday Apex might, you know, give you a phone call and say, what are you doing? We don't like this. So I'm not going to risk that. I want to stay in good standing with Apex. I very much like Apex as a company, and they pay. So I trade them normal with a little bit more size, so multiple minis to start, and I lower the grade of setup that I would take. From, you know, a B- minimum to like a C minimum. So bigger size, lower average quality trade, which helps me get it out of the way faster on average. Now, Trev, all you guys also know that I size down into the finish line, because if I'm gonna blow an eval, right, wouldn't I want to do it as quickly as possible? I mean, that's my logic. So I trade, you know, maybe 2-3 minis to start. I get a couple trades out of the way, get the bulk out of the way, and then when I have 500 to $1,000 left on the eval, I just size down a little bit and get it done. Scout my way to the finish line. As I invest more time, I back off on size a little bit because now I have more time sunk into the eval. You guys, listen, I get it. Real life is real, of course. And an eval costs money, and you have a finite amount of money, especially in the early days. There is not a lot to go around. That's why you're doing this. Believe me, though, I get it. I get it, 100%. Been there. Believe me. But you got to think, the mindset will win over a temporary issue. You know, poor is a mindset, broke is a situation, right? Okay, that's a shrinking bull body on 8, so let's watch 9. We might have something here. I mean, I don't know, you got to think. I get it, your time might not be more valuable than the eval costs right now, but if you never treat your time like it's more valuable than the eval costs, why would it ever be? You know what I mean? So even if it's not technically right now, I would very much so argue, for the sake of progress and your mindset, that you need to treat your time like it's more valuable than what the eval costs. They're too cheap. They're too cheap. You want to make a lot of money trading, right? Listen, whatever that means to you, I'm not here to say like you have to make this amount. I'm here to say you need to make as much as it takes and then a little bit more for you and your family to live a very low stress life, that you can do what you want, have the things that make your life better, fulfill the dream, and then still have enough to just spread it. Right? Because like in all actuality, for example, I mean, this is the way that I think. If you go out to lunch and you have a waiter or a waitress, I was a waiter, actually. It's hard. You know, you can make okay money, but it's not like an easy way to make money. Okay, and that was a very good experience. I'm very glad that I did that. Because now I look at that and I say, okay, look, here's a person that's working their fucking ass off on their feet all day. They never, or have not yet, I'll say, which is what I'd much prefer to think, they have not yet found a way to have more leverage than they currently do, whether that's because they were in a situation where maybe, they had kids young, had to figure it out, didn't have the luxury to figure out how to get more leverage, okay? So if you're in a situation, where you go out to dinner or lunch and you happen to maybe have more don't think about it this way, like, you don't want to put people down, obviously, but you think, okay, I'm in a situation currently where I have more leverage. I'm able to make more money in a shorter period of time than this person who's very nice and seems like a very good person who's helping us out. Spread that leverage, okay? And, maybe you don't have to give them some big fucking lecture. Just be kind. They don't need to know anything else. And hopefully they go on to create more leverage for themselves. Or if not, you at least give them a boost, right? A morale boost, so they're happy. Maybe shit's not going so hot. You're in a blessed situation when you have the amount of leverage that we can get as traders. Like it's kind of nuts. Spread that, man. The fact that you even had the opportunity to figure this out is a really big deal. Like, not everyone has this opportunity. You're sitting at, it's Monday morning. You're sitting at your computer, whether you're working currently or not, or driving a truck, whatever. You have the opportunity to sit here and watch the Nasdaq. Man, the fact that you even know this is an opportunity is a blessing. A lot of people, they don't know this. And if they did, they'd be like, well, I can't do that. I have to be at work at that time to provide for my 6 kids that I had young. "70 seconds out." Come on, bar 9, what we got? All right, here comes the rollover of 9. Inside close. Next bar. All right, Bears, come on now. What do we got? Apparently not much. Bulls trying to wick it right back up here. ATR just 26 here on a Monday morning. That's pretty low compared to what we've been seeing like last week. Right now, that ATR would have been about 55, 60. All right, halfway through this 5-minute bar here, 2.5 minutes out. We got Bears. Blake, good morning. 2 minutes. That is what I'm saying, Chuck, 100%. Or whatever. I think two of the most simple things in life that just kind of bug me the most, and I think says a lot about the individual. Not in a judgmental way, but just in like a, okay, I think that says a lot about, you know, your habits, is extremely stingy tippers. I get it. You're like, well, I don't have the money. It's like, then don't go out to eat. Simple as that. You gotta tip at least some half reasonable. And second, fucking people who don't put their carts away at the grocery store. What's wrong with you? And lazy. Just leave it by your car. I know one of you out there is like, yep, I do that. Stop immediately. Says a lot about you as a person. The little things. And it's not about, impressing anyone who sees you. That's not what it's about. It's about respecting yourself. If you can't even walk a short distance to put your cart away, and then you sit there and tell yourself you're going to make a certain amount of money doing one of the hardest things on earth. Big dog, you got problems. There's another thing coming. Come on, bar 11. What do we got? 253 out. The only people who would be annoyed at me saying that are the people who do it. Come on, don't be that person. It's too easy. It's so incredibly rude to everybody not to. And just the principle of it, if anything, the principle of it is a big deal. Hey, One Eye, good morning. Good to see you. All right, 11, we are 90 seconds out from the close here at bar 11. $45 seconds. Coming in for a tester to high. All right, now if we can get a decent close out of 11, 12 decent close equals a stop limit buyout from me. I've got a present for the Bulls if they can put that together. All right, good close out of 11. What does 12 got for us here? All right, 12. Good work, Bulls. Let's keep that moving. 4 minutes is an eternity to clean this baby up and hold it, but let's see if they can. Come on, Bulls. Do you do better in a fast or a slow-moving market? I feel like I'm better when it's a little slower. Well, okay, so honestly, I think most people do better in a fast market when they size down, because fast markets are a little less efficiently priced, which means edge is a little better, easier to come by. Most people do worse in a fast market because they don't size down. They don't adjust their size. Sizing is half the battle. So fast market, when the sizing is correct, is where most people will perform the best. Slow markets are harder to find edge, but you feel like you're more in control because it's slower, right? And then when it speeds up, you don't size down, you take the same setups, and you might actually have more edge, but you're way too big, so you blow counts. And then you think you don't do as well, right? Or you take a bigger loss on one trade, and you're like, well, I just wiped out a week of trading. Yeah, because you didn't size down when it got quicker. Sizing is a huge part of trading, and it's not that big of a deal. It's really not. You just gotta check the ego. Okay, it's moving faster. I sized down a little bit. All right, Bulls, that's a very, very good look. 2 minutes out. Bulls. All right, we better get over to the execution screen. And let's see, what do the Bulls got? Minute 10 out. Hold that up, Bulls. Don't grow it too much, but so far, yes, this is a nice bar 12. We just gotta hold that now. I don't want to see too much wick. I don't want to see too much growth. That right there is perfectly fine. All right, we ready? Let's get to it here on a Monday. All right, 19 seconds out. Gonna go ahead and get the copy trader engaged. And let's see, can the Bulls give us a nice clean close? Here on bar 12, up near the high. Go put out my stop limit buy. Keep that guy ready to place. Boom, place him. We will get a fill. Suck that risk back. Move that guy up. Beautiful. Now we got to come onto the stop here. Place him where we want him. Boom, right there. All right. Now we see if it works for us, right? Beautiful. I like that setup. Now, we'll see if that if that soft bull channel comes into play. If that soft bull channel comes into play and they take out the signal body, we'll stop ourselves out and move on. I'm sized relatively small here for the volatility, so really whatever happens here, no big deal. ATR 26.25. But of course, we'd like it to work for us. So let's see if the bulls can take that baby up through after those 2 consecutive growing bull bodies out of 11 and 12. Very, very nice. And kind of put a softer bull channel to rest a little bit and carry that momentum up through a little bit. Now, let's see. All right, good. All right, bulls. Let's take this up through. That right there. That is the best ram sequence so far of the day. Now, of course, on every trade, there's always 2 looks. So there's the ram look, and then there's the soft bull channel look with a ascending resistance. It's very aggressive. Ascending, I mean, the resistance is a very aggressive ascending level. You guys know, the closer to vertical a level becomes, the weaker it gets. So it's a good bet for me. See if it works. Okay, now look, a lot of people, a lot of traders look at this situation that we're currently sitting in. And you know what they always say about continuation that hesitates a little, which is not a big deal, by the way. You can't expect every trade to just shoot 100 points with an ATR of 26.25 at the time of entry, now 27.5. We'll say, well, why don't, what if we wait for the next bar and then let it pull back and then enter? You're scared. You are scared because you've seen how many trades have I taken that are continuation. Not this one, of course. But how many trades have I taken that are continuation where I get an entry and it goes. And I'm in the money 32 points before you can even open your eyes after blinking. Like, kind of often, right? at least in higher volatility environments. You would miss those. Those things keep the bills paid, man. You would miss those if you're waiting because you're scared. You don't want this soft bull channel to become a thing. And you're like, well, I don't want to lose because look, that looks like it's too high to buy. Okay, well, you can think like every other trader, and then in the long term, even in the midterm, you can get the result that every other trader gets. 90% plus of traders get, which is losing. You know, right now, this looks like a really bad entry. Oh my God, you bought the high of day. Yep, I bought the high of day. I would happily sell the low of day if we had a RAM setup coming into it, because I know that if I take this setup 1,000 times, I make money. Now we'll see if this one works. Gotta tell you, I don't really care whether or not this one works. This is about the bigger sample size. Now, of course, I want to make money on this trade. Of course we do. I want to make money on every trade, but that's not the business. The business is making money over 100 trades, 1,000 trades, a career. Right? Get the sample size up. Let the edge play out. The casino, you know, Vegas is a beautiful city. The Strip was very expensive to develop. Do they win every hand of blackjack? The casino, do they win every hand of blackjack? Are they making money on every single slot spin or spin of the roulette wheel? Of course not. That's why they're in business. But they have a statistical edge. So all that to say, bulls, come on now! 3:15 out here on this bar 14, 5-minute bar. Okay, so for me on this trade, I'm looking for at least one R. That's one R, not one ATR. It's one R I'd like to see. So, trade expected to take a little bit of time here. That's no problem. All right, inside close out of the bulls, but we'll take that. Not too bad. Let's see what the bulls can put together here. ATR 25. All right, bulls, lots of work to do here. Again, for me, looking to get 1R minimum. This is where everyone likes to say, I'm going to book that up. 900 bucks, let's take it. Okay, that's why you lose. That math doesn't work, big dog. To me, it ain't over till I get what I get or we get stopped out. Or I should say, get what I need according to RAM, or we get stopped out. Nothing else means anything. All right, bulls, let's keep that moving. Let's keep that moving. Well, pretty soon here, I'd be placing my limit take profit at 1R. In the meantime, I like to stay exposed to a bigger move in case we get a Trump tweet or something. But as we get closer to that, in this case, 40-point region, that's when I'd place it because the limit order take profit is quicker than me manually. But again, in the meantime, I think it makes sense to stay exposed to a potentially bigger move in case you get a shoot. Well, okay, close out of 15. That does not require me to move my stop. Kind of wiki. So the way that I look at this is I just, regardless of whether I'm sitting flat, short, or long, I was just getting deep into this in the tomb on one of the aftermarket videos. The way that I think about this is I look at every bar and I think about just buy or sell decision or do nothing. Now, most of the bars, I do nothing, right? But if there's a buy decision, I make a buy decision whether I'm short, flat, or long. So a buy decision when I'm short, if it's a setup that I would get long on, is a cut early decision, correct? I'm going to move this to my take profit, which is right there, 1R. Okay, perfect. A buy decision when I'm flat puts me long. And a buy decision when I'm long, you can do one of two things. You can either add or you can move your stop up beneath that second signal body, which you guys have seen me do sometimes, if we get the situation where I need to, which we might get here on 16, let's see. Or you can add. In prop adding, you know, you can do it if you start small enough. A lot of people add, but it's kind of an improper thing to do because you're starting with too big of a position. So when you add, it gets way too big for the trailing drawdown. So all that to say, within RAM, just make a buy or sell decision, and whatever the net outcome of that is, whether, hey, I'm getting short, I'm cutting the trade early because I'm long and I would get short on this new bear sequence. Or, hey, we got another buy decision while I'm in a long. Either add or move your stop up one tick below the wick low of that second signal body. Right, I mean, that makes sense. So, signal bar on this trade here was 12. A lot of work to do yet, bulls. All right, bulls. Bit more work to do here. Ain't over till it's over. Let's see if they can finish this up. All right, minute 8 out here, by the way, from the close of bar 16. So if we get a very nice clean bull body, that will require me to move my stop up one tick below 16. Currently, that is not what we are having. So let's see if the bulls clean this up and give us a nice clean bull close that if I were flat, I would get long on. If we get that, then I say, okay, it's a buy decision, so I'll move my stop up one tick below bar 16 because I'm already sitting long, right? The decision making on RAM is one of the biggest benefits. It's incredibly simple. You guys know I do not like being confused while trading. I don't think anybody does. When you're confused, you don't make money. You make inconsistent decisions, and then you definitely don't make money. All right, 22 seconds out. Let's see how this closes up and if we have to move our stop up here. So let's see. And we will have to. So let's move that guy up. 2 right. Yeah, there. All right. Ideally, these bulls can just take it away. So now's one of those situations where, you know, psychologically, I think this helps a lot of people. It's like, okay, well, it's not if I make money, it's how much money do I make. You know, I honestly, I'm never a big fan of these situations. I don't know. I've never needed that psychological help. Well, I mean, at least not since like the very early days. But that's what I got to do, according to the system, because that bar 16, that is a buy decision. All right, bulls, take us up through now. Let's do it. Now, you guys know the moving my stop thing. You guys that have been around for a while, you regulars. You know, it's not super often early in the day like this that we have that opportunity to do so. But you know, I gotta do it. That's part of the that's part of RAM. It's kind of a small part, to be honest with you. I don't think you necessarily have to. If you like really hate that idea, I don't think you have to. But for me, I think it makes logical sense, because if we get that second buy decision, now again, usually early in the day, the trades don't take long enough for us to get that second buy decision. We're usually just out regardless. But here we are, so let's see. Come on, bulls, pop us through that wick high of 16. Take us out at 1R. It's actually a tick better than 1R. At least one original R. All right, bulls, do it to him. All right. See, can the bulls pop this baby another 5 or so points? You hit our target. Let's see. Nice slow controlled move here. Oh, there's another decision, so we got to move that up. Right there. Another pretty clean close out of 17. So stop gets moved up again, under 17. Couple of moves of the stop here on this trade. That doesn't happen too often. Now let's see if these bulls can finish it up for us in our favor here. I guess either way is in our favor. But you know which one we like. Well, Bull's taking us within, what, 3 points so far? No cigar. Can they finish it up for us? Well, alright, Bulls, what do we got? Small bear body. There is no decision to be made on that bar, so we do nothing. Inside close on 18. All right, Bears, see if they pull it back. So far we've been about, what, 3 points? A little less, 2.5 points of hitting our actual 1 hour take profit. And let's see if they hit our little stop here. Well, bulls, if you can pop it through that little high, we should be taken out. And we've got within about 2.5 points so far, which is, fine. A lot of people lose their mind when they get really close, and then it turns around on them. Look, I don't know what to tell you. A certain percentage of the time, it's going to happen. And everyone says, ooh, I know how to fix that. I'll start taking it earlier. That doesn't fix it. Because when you take it earlier, it's still going to turn around a little earlier than your earlier take profit. So it's a race to zero. I mean, come on, use your head a little bit. So how do you fix it? Well, you stop getting so upset when it does a certain low probability thing on some trades. You say, okay, interesting, and you move on. Because believe it or not, people don't like to think about it this way, but those low probability events also happen in your favor. Sometimes it's going to get within 2.5 points of hitting your take profit, turn around, stop you out for a big red loser. Now that's not a possibility on this trade. We make money either way at this point. But another small percentage of the time, it's going to get within 2.5 points of your original stop loss, turn around, turn into a winner. You don't think about it when it happens to you in your favor, do you? All right, small bear body with a wick out of 19. That's basically a close meeting the wick low of 18, which again is that's not a decision bar, which means we leave it as is, which means I leave it as is. All right, Bears, what you got? Now again, the most recent signal body while we were in the trade we got was 17. So if the Bears take out the wick low 17, we'll take us out and move on. But let's see now. Bull's trying. Now again, as far as quote-unquote trailing a stop, I don't even like to say that because I think people start to think of it the wrong way. All I do is move my stop if there's buy decisions while I'm already long. If there's a point where I would get long if I were flat and I already happen to be long, then I move my stop below the most recent signal body. That doesn't happen that often. Trades have to take their time for me to even get that opportunity. On this trade, it's happened twice, which again, doesn't happen all that often, but that's why our stop's beneath the wick low of 17. All right, Bulls, what do you got? You got to take out that wick high on 17.18. All right, inside close, small bull body out of 20. Yeah, no decision to be made on that bar, so we do nothing. So I do nothing. All right, bulls. Let's pop us up through that wick high and hit our original take profit, 24.50. Let's see what we got. ATR kind of low today, down to 21. You're on the 5-minute chart on NQ. All right, bulls, what you got? Don't let those bears turn this guy into a double top. All right, so we've been about 2 points, within 2 points of hitting our original take profit there at 24.50. All right, let's see if these bears take out that low of 17. Let's see what they got. All right, they'll take it out. A lot of you guys saying you got filled up at 24.50. Well, I didn't. So instead of making 3,100, we made like 900 bucks. Whatever. Let's move on. Hey, it's gonna happen sometimes. That's not a management issue, by the way. That's just a probability thing. So fine. I think we're probably entering a trading range here. So 30 seconds out from the close of 21. Let's see what we get. Yeah, I think we're probably headed for a trading range. All right, rollover of 21 coming here. Gonna update the trade count. All right, let's see what 22 brings. Yeah, I mean, I gotta tell you, it wouldn't surprise me if we see this, at least for like a short period of time. Which is tight. That's a tight range. So, ATR here on NQ is 22.5 currently. What I'm really after here is a bump in volatility. Hey, first payout request on the way. Very good work. It's a big deal. Listen, you guys, if you trade some kind of consistent method, whether it's RAM or whatever else, and in doing so with responsible sizing, you take a payout. Okay, that's proof of concept. Now scale it. You know, I know some people will take a payout based on, you know, like luck, kind of, over like an 8-day period. They'll have, 5 days where they do really well, they get a payout, and then they never get another one. But if you're trading a consistent method with, 3, 4, 5 micros and you get a payout, that's not the same thing. That's not luck. Okay, that was positive expected value during that time frame. Proof of concept. Now scale it horizontally. All right, guys, hey, quick break. I'll be back in a couple of minutes. Like the stream. Hopefully, me leaving will get some volatility lit under this market. Be right back. All right, welcome back. And market has done very little since we left, so we have missed nothing. Couple of back-to-back dojis here. Bar 25, 345 out from the close. Let's see what we get. So far, that trading range has essentially played out to a T. That guy there. And we do not want that guy to continue to play out to a T, so, Trump, maybe tweet or something. Anything to get this volatility going. I don't want to complain too much because ATR at 21 on a 5-minute chart. I mean, we've seen ATR this time of day at like 11, which is a disaster. 21 we can work with, but higher is better to a point. So those of you guys asking, the fastest, best way to learn RAM is to join the tomb and hang out here every day. But if you don't necessarily need to expedite things or want to expedite things and you want to do it all for free, hanging out here is the way to do it. But if you want to join the tomb, the link's in the chat. All right, 220 out. Bulls, Bears. You know what I would really like to see right now? The Bears take this baby 2 to 3 consecutive big bear bodies, feeding on themselves. Big old dump off. Terrify everybody. Get everybody selling this thing down, and that'll light a fire under the market. Quickest way to get some volatility in a slow market is for the thing to just crash. Gotta love it. That would be a nice thing to see right about now. Well, let's check in with you guys. How are we doing today? I know the market's kind of slow. This is actually a good way to check in. Different environment than last week. I know last week a lot of people were killing it. Killing it trading RAM. How are we doing when the market slows down? I wouldn't say that the expectation should be to maintain your performance that you saw in a faster market, because that's, you know, that's a little bit unreasonable, but you shouldn't, you know, one day small sample size. But just because things slow down, you shouldn't necessarily be blown out. Manuel passed 3 take profit trader tests. That's a big deal. But be maxed out with 5 take profit pros, man. That's a really big deal. Daily payouts over at Take Profit Trader. By the way, that right now, Take Profit Trader is the best deal right now. 40% off, no activation fee, code BIG, B-I-G. Well, bar 25 giving us a tiny little bare body close, essentially a doji. That's basically back to back to back, 23 through 25. All right, let's see what 26 can bring. 4 minutes out. Chris K. Hey, good to see you, brother. One of the OG Chris's, man. We've got about 15 in the chat. Well, it'll be good to have you back. Full time. All right, 26. All right, 26. This trading range has been kind of a pain in our ass for the last 45 minutes. Which, you know, it's better than 3 hours. But it's about time to take this baby out. Bears, step in. Let's sell this baby down to 25,000. Chris N. Do you think it's possible? I'm not kidding about the Chris's. The Chris is by far the most common name in the chat. It's kind of crazy. Do you think it's possible to scale when trading on a phone? Okay, Chris, good question. Those of you guys who use Tradeovate as a trading platform, I use Tradeovate to connect my take profit accounts into NinjaTrader, where I use the affordable indicators copy trader. But those of you guys who actually use the Tradeovate platform, does the copy trader work on mobile? I gotta tell you, I've never, ever traded prop on a phone. I've never traded on a phone. Prop, that is. I've traded on a phone, but not like active intraday prop trading. Can you even do it? Is there an option? There's got to be an option. Or are those of you guys who are on mobile, are you trading multiple accounts or are you just trading one account on like Tradeovate? Anybody who is currently copy trading accounts on a phone, drop in the chat how you're doing it. Yeah, it's tough. Honestly, you guys, yeah, it seems like no one's really found a solution on mobile to copy trade. Honestly, guys, straight up, if you want to start scaling your trading, here's what you should do. Seriously, even if all you have is a phone, and I get it, you're like, well, I don't have that. Okay, well, you gotta figure it out. Go on, I don't know, I guess Facebook Marketplace would be where you go for this. Find somebody in your area who has like an old Windows PC, because, you know, Windows is a little more trader friendly, honestly. Not even old, just like one that they want gone. Toss them $100. Make sure it has, you know, at least, I don't know, a half reasonable amount of RAM. Make sure it's within the last couple of years. You don't need a lot of computing power to run trading platforms. It doesn't take much. It takes way more computing power for me to run all of this than it does just the trading. You can run the trading on not an expensive laptop. Pick that up, invest in that. You're going to thank yourself for doing so, and that'll get you off mobile. I think you'd be surprised though. You can get a half reasonable laptop from someone in your area for not that much money. Yeah, Niles, okay, so a VPS, you use a VPS to copy trade and log in on your phone. Honestly, I think using a VPS on mobile for the average person is going to be a little bit complicated, honestly. I really think you're better off going on Marketplace, finding a nice person who has a laptop that they've now replaced who's just trying to get, you know, a lunch out of it or a dinner out of it or whatever, pull up. Here you go. Thank you very much. I really appreciate the deal. There you go. You're good. Yeah, Trev, that's all you need, man. That's all you need. If all you're going to be doing while you're trading is trading on your PC, you do not need some ridiculous at all. Like, a bare bones PC will get you by. At least in the early... And then you upgrade for reliability. But in the early days, man, just get something cheap. Oh my goodness. All right, we're a minute 20 out. ATR is still 20, but we're seeing 4 back-to-back essentially dojis. This type movement, I'll tell you something, does not last. So, when this breaks, I do not care which direction it goes. I just want some clean price action, 2 to 3 consecutive bodies, and we're back in the driver's seat. Ten seconds. Goodness. Come on, Bar 28. What you got? 3 minutes here left on bar 28. Come on, 28. All right, 28. Minute 45. I don't mind seeing that. Let's keep that pushing, bulls. Whew, take us out of this trend range. All right, 45 seconds. Bulls trying to push into the high of day. Let's see how 28 closes up. If we get a nice clean close out of 28, then 29 has some potential here. 30 seconds till we find out what we get out of 28. All right, very, very good close out of 28. Right near the high. Very small wick. All right, bar 29, 450 out. Let's see if 29 can give us a nice clean bull body closing near the high, ideally similar size, or if not growing a tad. Then, upon the close of bar 29 here, I've got a present for the bulls called a stop limit buy. Let's see. And let's see if the bears just take this baby right back into the trading range. All right, bulls, let's keep that attitude up. Three and a half minutes. Hey, if you guys haven't yet, hit like on the stream. Appreciate you doing so. Helps out tremendously. And that's how we do our giveaways. right, we are less than 3 minutes out here. Come on, Bulls, let's get it done. Son of a... Oh, you bears! Right back into the trading range out of the bears. Goodness, I gotta tell you though, I don't mind that at all because more volatility right now is good. I'll take volatility over anything. Couple of Trump statements. He says China has been respectful of us. Says China is paying a lot of money to the US via tariffs. All right, Trump on China trade, potential 155% tariffs come November 1st, unless we make a deal. Trump says he expects to work out a fair deal, and he says we worked out a very fair deal in South Korea. That 155% threat, clearly the movement causer there. All right, 15 seconds out to the close. Year of 29. All right, bar 30. Big bar 30, what you got? Right back into the trading range, coming down for a test of the 20 EMA here on the 5-minute chart, which also, by the way, happens to be kind of the low end of this this trading range. All right, big bar 30. Let's take this baby down through the 20 EMA. That'd be nice. And then, hey, I'm 31. If we can get another sizable bear body, all of a sudden we've got stop limit sells on the menu. All right, 60 seconds here till the close of bar 30. Reminder, guys, hey, best deal on prop, at least the props that I like. Best deal today is going to be Take Profit Trader, daily payouts. 40% off, no activation fee with code BIG. Man, Take Profit, they used to be 30% off, and they switched to 40 for 4th of July, and they've kept it at 40% off, which is kind of a monster. So then, again, if you use code BIG when you sign up at Take Profit Trader, you'll get 40% off the rip. And then when you pass the test, rather than paying the over $100 activation fee, you pay nothing. They just activate it, which is obviously very helpful. All right, here is the start of bar 31. Big ol' inside close on a 30. Man, this trading range is just becoming kind of brutal. This has been a range now for over an hour. Again, quickest way to solve this is for the market to just kind of fall off a cliff. That always never fails to light a fire. All right, guys, well, little green day here today. Kind of a slow start to the week as far as volatility. I mean, man, the range on the full day, it's going to look a little bit deceiving. Because, I mean, it is over 200 points, but a lot of it's made up by bar 1. Kind of a slow grind we got involved in. And then from there, you know, ATR is 23, which is, you know, 23 is workable. We can work with that. But since bar 23, really since bar like 18, this trading range has been tight. You know, some potential there on 28, 29, shot that potential in the foot right back into the trading range. So, all right, guys, time for me to hit lunch, and we'll see what the afternoon brings here. Hey, reminder, quickest way to learn RAM is going to be to join the tomb. That'll help you expedite things, and I think is well worth, well, I know is well worth your money. We have people inside already killing it, very happy customers. so far, and let's keep it that way. Second live training ever inside the tomb is tomorrow afternoon. So I'll tell you guys what, I'll see you there. All right, guys, hey, tomorrow morning, let's get an ATR back up to 70, baby, and make a whole bunch of money. All right, guys, stay disciplined. Let the trade come to you. When it does, no fear, I'm telling you, put it on, accept the outcome. When the decision making is easy, it's easy to stay disciplined. You can't brute force discipline. It just has to come as a result of confidence that you build by making consistent decisions, okay? Kind of a catch-22. You're like, how do I get the confidence without having the result? Well, you get the confidence by trading some kind of system that you believe in, that the decision making is simple. That'll create confident, consistent decisions, which over time can equal positive expected value. All right, guys. Good to see you guys. Tomorrow morning, back at it. Excited, man. No fear. Do it to him. All right, guys. Have a good afternoon. I'm off.